Have you ever noticed how you enter a trade of a buy or sell and you're instantly on the red? That's not a mistake. That's called spread. And if you don't understand it, it's draining your profits. Trade after trade. This is the hidden fee in Forex that most beginners ignore, but not after this tutorial. What is a spread? A spread is the difference between the bid price and ask price. Simple. The bid price is your price for selling. The ask price is a price for buying. Simple. Now, let me explain that so you understand in a much better way. Open your MetaTrader 5 on your mobile phone. Open your MetaTrader 5. Go to section codes and look at these assets here. These are the financial asset that we trade. Now, let's take for example, AUD/JPY. Below here we have 4. That's a spread. Now, where do we get this spread? We get the spread between this price and this price. When you minus this price and this price, you will get the spread. In between, there is a spread. So, in short, to understand a spread, it's a profit for the broker. So, it's a fee that they charge for when you buy or when you sell. So, you'll instantly be in the red before you get to profit money. So, now I want you to understand that how to actually trade with the broker that has a lower spread, and why a spread, why you should understand the spread so that you actually manage your risk. It's important to understand the spread when it comes to analysis, when it comes to risking, because when you do analysis, the candlestick, they open because of the bid price, this price. They open because of this bid price. Simple. Now, if you have a broker that has some weird spread, then you'll be trading in a bad environment and you'll experience stop out, you'll be losing money. So for you to be safe, make sure that you're using the trusted brokers that they offer a spread that is like this. Now, this is the lower spread. If you like to trade, let's say you like to trade gold, you see the spread here is 6. It's important to understand the spread. The spread is counted in terms of points. So we'll get into what you really need to know when it comes to spread. Now, if you click buy or click sell, this spread will be counted based on how much lot size we are using or volume. So now, let's say in this case we make an example. Let's actually select an asset that we can actually check this. Let's use the AUD/JPY. But this one of AUD/JPY, let's use this one of 25 so that you can see. Let's go to chart and we click here. We click on buy, right? We click buy. Remember, this is the price of buy. This is the price of sell. And this price of buy is an ask price. This price of a sell, it's a bid price. Simple. So our chart is taking forever to load, but I wanted us to make a sell or buy so that you understand in a much better way why a spread is important and why you should know a spread in Forex so that you can actually manage the risk. Now, let's check another asset because this one is taking forever. It's taking forever. Let's check for another asset. Let's see here. Our network connection is not well. Let me do like this. All right. All right, let's see. All right, let's see. I'm waiting for a network connection. Be patient with me. Let's look for that asset. It's loading. All right, let's be patient. Click on chart. It's important for you to know spread. You see the line is just right here. It's a line for buying. This line here is line for selling. And we have a fixed and variable spread. I'll explain that. Now, let's go ahead and click on change time frame to 5 minutes, 1 minute again. Now, when we click buy here, this is the ask price, the bid price. Let's click on buy. The order will be open above here. You can see. Let's click on sell. But then before we go to sell, let's look at the amount of money that we're paying in terms of the points. All right, you can see here how much money we are losing. You can see we start at a loss because of what? Because of the spread. So let's go ahead and close this trade. Close this trade. Okay, it's closed. All right. Now, after we close that trade, let's go to chart again. Let's make a sell this time around. the order is open below here. Just you can see, we could click on to trade. We have here, you see that we start at a loss because of what? Because of the spread. Now, it's important to actually have a broker which offers a lower spread. Let's click on this asset again. Click on XAUD, which is gold versus the Australian dollar, and click on properties. If you're using an iPhone, you'll just go to details. Now, we have a fixed spread, we have a variable spread. Let's look here. These are the properties of an asset. The properties here, we have a spread that is floating. A spread that is variable is floating, will keep changing. We have a fixed spread. This spread is offered by a broker. The broker, they have this spread so that they can actually profit from our trades. When we click buy, when we click sell. This is the hidden fee when we trade the financial market. So it's important to understand that a spread, it's all about how the broker has to profit from us. Simple. So if you now understand that we have a fixed spread, we have a variable spread. These are the two types of spread, and we have different accounts when we're using when we use brokers. Some brokers, they offer ECN account, which is an electronic communication network. This account, you'll be actually paying commission. If you scroll all the way down, you'll be able to see where it says commissions here, and you'll see how much money they will be charging you per a lot size. If you open one standard lot, this is 0.02 100,000 K contract size. They will charge you, if you open one standard lot, this much. But if you open 0.01, they will charge you less. That's a spread. So if you like to minimize a spread or use a less spread, you must actually use a broker that I recommend. You can also go to our YouTube channel. There's the brokers that I recommend for you to actually use so that you can actually be safe. Because spread, in most brokers, if you're trading news, you sometimes you'll have slippage. Slippage is when you click buy and the order is not filled at your desired price. They will actually trigger that order at an undesirable price. So it's important to understand that a spread is a hidden fee in Forex. When you have to trade, if you're a scalper, you must have an ECN account. If you like to actually trade and make money, and please make sure that you join our WhatsApp group and join our WhatsApp group here, right? If you like to actually advance your skill, we have a mentorship program for those who like to advance their skill, all right? Now, a spread will trigger your stop loss early. If right now you've set a stop loss, some of you might not know how to set a stop loss. We have another tutorial on this channel. Please make sure that you check how to set a stop loss. And if you're trading with a spread, it's important to understand the number of points. If right now we click on here, you'll be able to see that we have what we call the points. We have points, we have pips. So we have another tutorial on this channel whereby I guide you through what to understand about points, pips, and the spread is counted in points. So if right now the spread, it's let's actually look here. The spread of this asset, it's what? It's this one of XAUD, XAU, the gold versus the Australian dollar is 23. That is 23 points. And if you take this 23 point times by 0.01, then you'll get how much money you'll be paying in spread to the broker. So if you set a stop loss, then you'll be actually what? You'll have to count the spread and also add the stop loss, initial stop loss, the logic that you use for stop loss. If you're setting a stop loss, maybe let's say above a market, above the highest. If right now you've made a sell, you want to place a stop loss here, you must also consider the spread. So it's important to also trade assets that they have lower spread. We have so many assets that we can trade. Let's click on plus here, and these are the assets that we can trade. So when you go to Forex, we have exotic asset, we have majors, we have minors. I recommend for you to actually trade the majors, not the exotic. The exotic, they have higher spread, such as in the case if you click here and go scroll all the way down, let's look for USD ZAR and add USD ZAR, go back. When you compare the spread here, you can see 529 is too much. If you click on chart, click buy with a 0.01 SL, 0.01, you go here, you see how much money you are paying. So it's too much. So it's better to actually have a trade. Make sure that when you trade an asset, you trade an asset that has a lower spread you are using a broker with that offers a lower spread for these financial assets, and you actually trade during, if you're trading currencies, you're trading during the London session, New York session. If you would like to actually understand the London session, New York session, we have another tutorial on this channel. So I love you all, stay blessed. That's all that you have to actually know about spread. If there's something that you like to actually ask me, feel free to comment on the section below. I'll really be happy to assist you in your journey to become a better trader. Now that you know why they're red when you start with click or trade or click buy or sell, don't ignore spread, leverage it. All right, make sure that you drop a comment on the comment section below. What's your current broker spread, average spread on Euro USD? Let me know. Stay blessed.